Welcome. We are back. A great day for the market. Very crazy. Let's see. On the S&P 500, you closed up 3%, 4.5% higher for the Qs, 3% for the Russell 2000, and 8% higher for the ARKK ETF. From a technical standpoint, coming into today, everything was on the brink of collapse, in my opinion. And a certain person has saved the market in a sense. You watched my last few streams, I was bearish. We started getting this pullback, and then boom, right back up today. And very crazy. I even mentioned very quietly on last night's stream, like, it just felt too obvious. And that's typically when the composite operator, in this case, Jerome Powell, just goes and says, all right, everybody thinks something's going to happen. It's time for the other thing to happen. And it changes everything. I'm going to talk about why. We're going to get to that in a second. I'm going to start off with crypto and other markets. What's up to Mr. Robinson, Zeke, Nerve, Risky Seeds, D, Max, AK, and Keanu Trades in the chat. Absolutely insane. Even crypto's doing well. We talked about this yesterday. Bitcoin on the 4 hour broke out of that triangle, up a little bit higher. I did see you post that inverse head and shoulders, Zeke, and you're getting a nice move, taking out some short-term resistance. You do have quite a bit of resistance around 17 to 18K just above you though, but it's a good start. And it looks like you're starting to curl off the bottom of this channel on the daily. Ethereum is back above the inflection zone, which is good. This blue zone over here, holding above it pretty nicely. Good to see that. And then moving on to other markets, the US 10-year with a bearish engulfing candle today. Lowest close since pretty much the beginning of October, heading closer and closer to that 3.5% level I've been talking about for a couple of weeks since it broke down at the top over there. And then next up, we have crude oil bouncing up a little bit off of $77, which is support. Gold is also moving higher, retesting the 1780 resistance, which was the highs about 2 weeks ago. You're retesting that level right now. Silver putting in a new high, and it's now above resistance. So big breakout for silver today. The dollar currency index is retesting its most recent swing lows and the 200-day moving average. And then finally, this is what we talked about yesterday. The Hang Seng Index with that inverse head and shoulders structure was testing the breakout. You are witnessing the breakout right now, up 2.5%. It just gapped up, and it's survived. Chinese stocks are back, at least for right now. So that's really quickly what is going on in other markets. Let's talk about USA now, okay? You are in such a crazy area. There is so much going on at the same time. Just for like a quick recap, all right? You were pretty much testing the breakdown of this bear flag. You had rejected like 400 twice under the 200-day moving average, under resistance. You were losing volume. And then from a few words, or more than a few words, out of Jerome Powell's mouth today, all of that just went out the door. And you shot up pretty much after his speech or during his speech. Volume is back in the market, and now you're in a whole different ballgame. I don't even know what else to say. Let's go down to the 1 hour chart. You can see you were testing this little zone over here, was support back over here, and then boom, just shot right up and then went straight up pretty much into the close. If anybody was in 0 DTE calls or whatever it was, it could have been a life-changing trade. And let's talk about you are right in a SPY. Probably the most important area you could actually be in. All right. We've been looking at this pattern, these two green lines, for a long time now, this descending running wedge. I talked about this months ago, where you had a potential partial decline over here because bears were not able to bring price action all the way back down to the bottom of the pattern. You only partially declined. You did not fully decline back down to the bottom of the pattern before going back up to the top of the pattern. That gives you statistically, I think, a 76% chance of breaking out right now. So you have that going for you right now. We also have the 200-day moving average which the SPY did close above. We go over to the SPX, the actual S&P 500 index. This is the first time you've closed above the 200-day moving average since like the beginning of April. First time since the beginning of April that you've been able to do that. And I can draw that same trend line for you right over here. You're testing that right now. This is the pattern that I've considered to be our bear market pattern, this descending broadening wedge. And currently, not only are you testing a breakout of the 200-day moving average, which you've not been able to break out of for 7 months, you're also testing a breakout of this pattern you've been in for almost a full year as well. So that is where we're currently at. And it was very different yesterday. You did not even get up to that point. We were down over here. We rejected that twice. But Powell wanted to test it. He said, I want to go say some nice things, and I want market participants to get us up to this level. And he orchestrated this test of the breakout, which we are witnessing probably tomorrow. Right now, futures are pretty flat. You closed right at that resistance level. This is also historical resistance and the gap fill. You have this gap fill at 408.46 from the gap down on September 13th. If we go back in time, this same level around 409 was resistance in the beginning of May, support in the beginning of June, support in February, support last May. This right over here is the biggest area for the stock market that there possibly could be, and we're at it right now. So all eyes are on this. I'm sure I'm not the only one looking at all these variables. You're testing this right now. Getting above, I'd say 410, 411 would be your breakout, and then that sets up a lot more room to the mid 420s in my opinion. Already off the lows of the year, we are currently up about 17%. So it's already been a pretty good rally. It kind of felt like it was getting to the point where it was over. And now we could see some more continuation if you get the breakout. And I'm not trying to get too ahead of myself. It's not confirmed yet. You're still just testing it. You're still in resistance. You're only close above the 200 moving average. That's the only resistance you took out. If we look at the Bollinger Bands, you still have that too. So you're not fully out of there. You still have 4 or 5 more points to go before you're really above resistance. But this is the closest you've been to breaking out the whole entire year during this whole entire bear market. So that's really what we're looking at going into tomorrow. On lower time frames, you literally just went straight up. There's not much of a pattern to look at. Really nothing of that nature. If we got onto the 5-minute chart, you kind of had this triangle where originally it kind of broke down, then it regained the pattern, and then you broke out of it during Powell speaking. So this is where the market is currently at. Moving on to other indices, the Qs. Also, we're facing this breakdown of this green zone over here. Today, you can see not only did you get back above it, but you have your highest candle close since September 14th. So you can see a few words come out of a certain person's mouth and everything changes on the charts. This is why you always have to be ready for news coming out at any time. Your technicals can only show you what is happening when there's no news. When news comes, it just shifts everything, which could help or not help. If you have an open mind and if you know how to manage your risk, then it really doesn't matter. But nonetheless, this is very different than what I've been talking about. I will admit that. Very, very different. And it was not the same thing yesterday. Everything can change in one day. That's how this market goes, and you have to be able to adapt to that. So we're just at a very new stage out of nowhere. And I'm not going to be like, oh, I'm completely flipping to the bullish side right now. I'm just saying that a lot of the bearish variables we saw are now, at least for right now, they're thrown out of the window. And that's just what happens when you go up 3-4% on the indices in one day. So volume's coming back in. You got a lot of strength. For the Qs themselves, I think the major resistance is around 297 to 303. From this high, this low, some consolidation over here, and the 200 moving average is all the way up at 306. So that is what's going on over there. I think I might have drew this out last night on stream, but I talked about that potential for like a bull flag and everything, and we're gonna look at that as a bull flag. Already broke out of it, and you're already going higher. So moving on to the Russell 2000, which is the one that personally I'm hoping for the most. It's been rejecting this area for like 2 weeks now, the 200 moving average. You closed back above it again, and right now you're testing these 2 lows from the beginning of February. So it can clear 188. That's what could set up some more price action to the upside, not just for the other indices, but for small caps. My favorite. All right. So literally 1 to 2 more points higher, and you get a breakout for the Russell 2000. And then the ARKK ETF, which was facing, from a technical standpoint, death, is also now back up above its final support, bouncing yet again. Now it's starting to look like a inverse head and shoulders kind of. And I know there's some mic issues right now. Hopefully it's not too bad. Maybe just move it a little bit away. All right, hopefully that's better. Let's see. So the ARK ETF. This is kind of a new potential view for it. This inverse head and shoulders. Really the big thing here is just to hold above that support that you've held successfully since May. Despite the SPY going lower, despite all the volatility, it somehow still has held this lower $30 level. And then I think breaking above 41 would be your breakout to the upside. So we'll see what happens. All right. Keanu was saying vibes in the chat. And Pizza Box said, do you think today was short covering post Powell? I think today was, I mean, when you get a move like that, it has to be a combination of both buying and short selling, no matter what. Short covering, not short selling, sorry. And Darwin says, a pre-written statement helped too that was released prior to his talk. Not disagreeing, definitely could have been. Again, I'm just looking at the price action. That's my job. That's what I do best. And yeah, so the ARK ETF second bottom at this level overall from this year. It was your lows during the COVID crash. I've been a little bit pessimistic down here because we haven't really gotten a larger bounce off of this area for the 4 or 5 times it's tested the same exact level. But it's a little bit different when you get price action like this. This is what kind of starts to give me hope. But it's just like the last 4 or 5 times because we've seen this before. We saw it over here. We saw it over here. You just went right back down. So I'd probably get more hope once you get like above, like, not that. Once you get above this, that's when I would be a little bit more hopeful. But it is a good start. Let's talk about individual names right now, starting off with FISKER. Last night on stream, I talked about this wedge breakout. Of course, thanks to the market in Powell, it did play out more than it probably would have without them. And now you're getting your third higher low in a row. Getting Bubba back $8 would be the big thing for this stock technically in the short term. That's the big level. You're back outside of the wedge. You can redraw the wedge if you want, whatever you want to do, but really what matters here is $8. That's the big level. 3 times now you've held these areas. MACD is getting very close to green on the 4-hour. If we go over to the daily, you can see that's your highest volume since November 10th in about 20 days. And it's a great start. That's really all I can say for a lot of these stocks. We're talking about our next swing, AMD, back in profit. All right. This is big. AMD is breaking out of this wedge it's been in since pretty much exactly, like literally exactly a year ago is when it topped out. And now you're breaking out of this wedge after holding the $72 support level. Bullish engulfing candle today, highest close since probably the middle of September. Got this gap fill at 83.5. The technicals look much better than they did yesterday. That's just what happens when you go up this much, even if it is because of news. So that's the other swing right now. It's currently up 2%. And then I want to talk about CLOV, all right? The only thing I really have been saying for the past week, because there's not much to talk about on CLOV right now, is this 121 support. You bottomed here in the beginning of November, and you've been holding it kind of just, it looks like Algo is just kind of chopping it up over here. But nonetheless, it has held 121. You're starting to get a bounce off this level again alongside the market, but still. We go over to the 4-hour, you do have confirmed classic bullish divergence. And if we zoom out over here, we connect this high from August 16th, which you could even really just connect with the highs overall from August 8th, which was your earnings highs. And then we touch that with the middle of November high. You are getting a little bit of a breakout here. So this is a little bit different. We've had other breakouts, like we had this breakout over here, which did nothing. We could go back and we could talk about this breakout that did nothing. The one difference on this one though, is that you have consistently held a support for like 2 weeks. That is a little bit of a game changer. It's not a big game changer. I think the only big game changer would just be for it to continue going higher, to be honest. But there's still not much resistance until $2. And you note there is a solid support at 121. So I just wanted to mention that. It's not a life-changing technical breakout, but it is, again, I'm saying it for like the 10th time now. It's a start. We've had starts like 4 or 5 times this year. Every single time, they just put the market lower. Like you got your dead cat bounce, volume dropped, you went lower. But the seasonality for this is good. There's a little bit of news behind it. You have the SPY testing a breakout of the pattern it's been in all year and the 200-day moving average. And hopefully, just hopefully, the only thing on my Christmas wish list, if any of you have been paying attention, is a Santa Claus rally. So this will be good timing. Just saying. All right, let's talk about large caps. Google. Biting my tongue on this one. I did not think it would break out. I didn't. It looked like it was going to be headed lower to this gap fill. Nope. This is what happens when news comes out. Google is now broken out of the descending broadening wedge. It is testing resistance. You can see these lows from last March. Also this low from May, and resistance this October, getting above 103. could set you up with quite some more room to the upside. There's a gap fill around like 111, the 200-day moving average at 114. So I was just talking about downside gap fills literally last night on the stream. Now I'm talking about upside gap fills. That's how crazy the move was today. I mean, we're talking about 6% in one day for Google. That is a huge move. And if we're going to be just neutral about it, you're kind of right in between the two gaps. You also have a more, I didn't even realize this, you have a very short-term gap around like 103. So that is Google right now. Amazon, same thing. It's starting to curl back up. Bullish engulfing candle today. Your resistance is around $103. You still have that gap fill at 89. You're kind of right in between them. So it does set up a little bit of a 50-50 in terms of just like levels short term. But you could zoom out, start to create some wedges and stuff like that. We will see what happens. I think at least right now it's a good technical change. The weekly still looks ugly in my opinion in terms of this inverted cup and handle. But hey, you have some classic bullish divergence potentially on both oscillators. Maybe you just invalidate it. As long as you can hold above 83, it's not over technically. And then Disney, still just consolidating over here. It's kind of creating, if we got onto lower time frames, a little bit of a wedge. It's just starting, but kind of have that going for Disney short term. Moving on to Meta, up 8% today. This is one I did talk about last night. Despite the bearish things I was saying, we did talk about this wedge. It broke out of it prior to Powell speaking today. And of course, with Powell speaking, you saw a very big move, pretty much back up to the highs since it gapped down and got destroyed post earnings. So testing that, you have this upside gap fill at 128 and resistance at 123. That dates back to 2018 lows. And even this low you put in just before those earnings on October 13th. Apple is up 5% today. Really nothing looks too different here. A higher low would be nice. I mean, you're currently getting that. And I genuinely think if it comes back down to this 135 level, it breaks. So as long as you stay above it, I guess it's still okay. There's been a couple of different things with iPhones in China kind of going out the door. And then also, I don't know if anybody saw, there was some video of a store getting robbed. I think it was in California or something, like today or recently. But it's obviously very big companies, so still just moving with the market. And then we have Tesla, which very quietly broke out of this wedge. I did talk about this. You had the classic bullish divergence up 8% today. So that bear flag that I was talking about at the same time really doesn't mean too much right now, unless you reject like literally right over here, which kind of is a gap fill and resistance. So you're running into a little bit of short-term resistance for Tesla, but getting above 196. We go over to the 4-hour now. Zoom out a little bit. Then your next resistance is all the way up at like 207. So it's like 196, then 207. Those are your next two levels for Tesla. Microsoft rejected this resistance zone twice. It just, everything I've been saying for the past, at least last 2 days, kind of just forget about it at least. Like it was right for a couple of days. We pulled back and it looked like we were rejecting and headed lower, but Powell just overrided pretty much most of the things that I was saying, which I'm not complaining about, because if that makes people money, I'm so happy. All right, so it's now above resistance, this blue zone. Next resistance is around 265. Coinbase, one I've been talking about, up 7% today, holding the all-time lows. And on the 1-hour chart, looked at this wedge last night on the stream, broke out of that wedge. So there's still good things happening everywhere. I know we also looked at Mara last night with Bitcoin bouncing. That was up 7% today. It's trying to get back above this demand line after, at least for right now, holding these lows from July. So that is good as well. And then SOFI, this is where it could start. I talked about this last night as well. The spring for some potential Wyckoff accumulation. It has to get back above and hold above 5. But if it can do that, I mean, there's a lot of open room over here. We'll see what happens. All right. So that is my breakdown. Let's take a look at energy really quickly as well. Starting to see a little bit of lower highs being created, a little bit of a shift in terms of sectors right now. Let's take a look at financials too, which is moving higher. If we zoom out over here, you can see this trend line from these 3 highs, broke above that and the 200-day moving average and this whole entire zone. So you're getting a little bit of a breakout on financials as well. You can take a look at a few bank stocks. All right, so first of all, Bank of America broke above the 200-day moving average and is now back testing it. Also, you had this neckline for this double bottom, back testing that as well. that breaks out, there's not a lot of resistance until 43. Well, it technically is already breaking out. JPM, I mean, this has just been going straight up since it broke out of this channel in October with earnings. So it has a little bit of resistance here and up at like 166. I mean, some over here. So JPM also continuing to go higher. And Morgan Stanley, if we zoom out over here, it's also taking out an inflection zone. So you're seeing like energy and financials, they already have been doing well. I think energy is kind of starting to lag a little bit, but financials are still holding up there. So we'll see what happens with those two sectors. So this as well. Industrials, same thing, breaking above this high from August. You're almost like back up to all-time highs on some of these. And if we look at something like the ARK ETF, well, you're quite far. So it just makes you think. You already have sectors that, after a few good weeks of price action, despite the bear market the whole entire year, they're getting back up to retesting all-time highs. But there's still so many baskets and groups of stocks that are just much, much, much lower. And if you were to personally ask me where the opportunity is, not financial advice, it's in being a good stock picker with these types of stocks. Because a lot of them are never going to go back up here again. They're just not. But some of them, even if they just go back up over here, you can make a lot of money. And I think that's where the opportunity is. That's where most of my swing trades are going to be focused around. But we need a lot more than just one good day because of Powell speaking. Get like that ahead of myself. But I'm just trying to show you how different areas of the market are looking right now. And yeah, Darwin says, politically speaking, haven't looked good or heard a Medicare discussion in Congress. If so, CLOV will benefit. Champ, you nailed it last week with FOMC minutes. It all depends on the edits and statements. I know today was a different event, but you had the right thesis. I do appreciate it. And again, I always am a lot less, I don't know the right word to use. It's a lot less stressful to be wrong while bearish than to be wrong while bullish, in my opinion. That's how I'm going to put it. Because even if I'm bearish and some news comes out that there's no way I could have predicted that changes everything, at least all the swings are going up. At least people's retirement accounts are going up. Whereas if I'm bullish and we're going straight down, it's like everything's going on. Except for shorts, which is not the majority of traders, at least until maybe this year. But that is where we're at. Let's do some taker requests. I do see Grayscale Bitcoin. If you didn't hit the like button, feel free to do so if you want to. Maybe not. This one's a little bit confusing. I would say you're in a wedge, you're holding support, your MACD flipped over to green. It's not bad. I would just like to see it hold $8. And then your next major resistance is between like $11 and $12. And with everything I just said, I know I'm very excited because this was just such a good day, but I'm still like 50-50 on the fact that anything can happen here. You're in the zone where this is either your short-term top or your level where you break out and have a lot more continuation. It's just a very big make or break area, but the partial decline gives you the higher percent chance of breaking out. We'll see. I am up for whatever. This is the one situation where the market could go either way and I'm completely fine with it. I'm just kind of like just a spectator. I just want a good game. I don't really care who wins. I just want to see a great game. I do feel like I'm a little bit of a bandwagoner though, just flipping back and forth after a day like today. But what else can you do when you're testing a breakout of that type of a wedge and breaking above the 200-day moving average, you know? NVDA. I'd say your next level is the 200-day moving average at 177. This is a premium swing. It already hit 2 targets. Anything, you might have had a little bit of like a flag here. Probably looks better on lower time frames, and you just broke out of it very quickly. That's really it. And the VIX was testing a breakout yesterday. It's now back at the pattern completion zone. You got a reaction move off the bullish bat I mentioned. You're now back at it. So same thing here. You break under this 20.3, whatever. Even let's just call it this little zone. If you break under this right over here, in turn, most likely what happens at that point is the S&P 500, 4 hour. The S&P 500 breaks out of this resistance. So that changes both of the things I was talking about for the last 2 weeks. It does. And at the most, even if everything is completely changed by now, there still was this. There still was this 2% pullback. I don't know. And then we have AMC, AMC. Some people watching the stream know why I'm saying it 3 times. You're in a flag right now on the 4 hour. Same thing on the 1 hour. You're also flipping this resistance from the end of October into support with classic bullish divergence. So if maybe the Russell 2000 can clear out this 188 resistance level, maybe AMC just maybe could break out of this pretty large bull flag that's been developing for like 2 or 3 weeks now and see some more continuation. Maybe hit the 3rd target of this premium trade and some other stuff too. We'll see. COSM, there's really not much I can do on a chart like this, to be honest. Those are like the only 2 levels I can kind of chart out. Pizza Box says, I'm leaning bearish as well, still rates increasing and money coming out. So until we see an end coming, we should be cautious. I still am cautious, yes. But if we do break out of this pattern on the SPY, at least as long as we're above that 200-day moving average, it's a bullish flip in at least for the technicals, all right? In the worst case, for bears. But yeah, of course, you could even break out of it, get a couple of weeks of rallying, make another lower high, and then just sell off again. But I'm just focused on the next move right now. SHIB, I think in general, this whole entire zone is a huge support. It's your final one. It's kind of just like levels over here, really all it is. And you're at the lowest one, so that's not bad, but you have to hold it for it to be good. I've not looked at Virgin Galactic in a while. We'll look at that in a second. GameStop still in its range. I still have my alert set here. As long as it's within this range, there's not much to talk about. I think breaking under 24 is bearish. Breaking above 28 is bullish. Very, very simple. Space. You really want to just be short term, I would just focus on this little breakout that it's testing. Longer term, 515 is one close level. And then after that, like 689, you have this low, this low, this high, this low, and the 200-day moving average. So it's like getting above literally right over here is what could set up that type of, but we'll see if it happens. Maxime says CEO of AMC resigned and laying 20% workforce. Yikes, I'm not sure when that news came out. It is flat after hours. At least that's what Google is saying. So we'll see if that affects things. That is concerning. Thought today may have broken GameStop out. Guess not. Yeah, I mean, with the price action, it's just kind of been in its own world, going sideways. Hello. That is space. Powell's still hiking, or at least 50 in 2 weeks, but glad to have the time to get more money ready, says Risky Seeds. All right, so not seeing any other ticker requests. FUBO, there we go. Max, good timing. Well, hopefully that happens, but I did not mean to do that. Support is around 234. Got a little bit of a falling wedge forming here. That's pretty much it. There are a couple other levels. Just a reminder, check out the links in the description. Free course, free Discord, premium, trading view link. GLSI, I like how it's already happened at this point, but I like how over here, even though it looks like it was just kind of consolidating, it was very quietly making these higher lows. And then right over here, it's kind of like an ascending triangle. That higher lows, just like the psychology of it, there's a resistance point where you have supply, supply, supply. But where your demand is increasingly becoming higher and higher the closer you get to the supply. This is your breakout point, you back tested it. Maybe there was some news here, I don't know, but it was like a perfect breakout back test, move higher. Now you're kind of testing this resistance from this high on July 12th. After that, you've got these lows from January, and those are your shorter term levels. There you go. Appreciate the support, Dave. End phase. It's like an inverse head and shoulders testing a breakout. I'm just going to draw it really quickly. Yeah, it's like an inverse head and shoulders. You're testing a breakout right now. Very good performer in this market. Skills, quite the opposite as the stock we just looked at. But it is testing a breakout, or not currently, but close to testing a breakout of this wedge it's been in since March. And you've got a little bit of hidden bullish divergence on the MACD. Support is around 89 cents. And plug, yep, you have a little bit of a double bottom forming here. It lines up with support from June and July. Those are some levels. And a failed cup and handle from the past. Alright, so that's going to do it for tonight's stream. Thank you for watching the stream. Keep an eye on that trend line for the SPY. It's also trying to hold above the 200-day moving average. That's a very big thing. Hit the like button, hit the subscribe button, check out all my other videos if you want to. And follow me on Twitter at ChampionVibe. Thank you for watching the stream, and peace out.